Welcome to AGORACOM, the Small Cap Epicenter, and AGORACOM TV, a daily, fast-paced, edgy show that brings you the best press releases out of the small cap world every morning before the open, so you can hopefully profit from them and maybe even find your next great small cap investment. Now, it's Monday, October the 15th. We've got some great news, as is typical for a Monday, and what I really like today is we're talking about a lot of great new technologies. I've got nano news, nanotechnology, I've got renewable energy, I've got organics, I've even got some traditional stuff for you in Canada in the travel industry. But let's get straight to it. First, right up here, API Nanotronics trades on the OTC under the stock symbol APIO. They put out their first quarter numbers, and they had some great numbers. Revenue is up 78% to just over $7 million. Gross profit up 100% to just under $2 million at $1.9 million. Now, net loss for the quarter was $712,000. But what I liked about this, non-cash expenses contributed $856,000. So if you take out the non-cash expenses, then you're looking at more than $150,000 in income. We like to see things like that, and that shows up on the balance sheet because you always see that translate into strong cash flow. And in fact, the company ended the quarter out with $3 million in cash on the balance sheet. And hear this, strong quarter resulted in a backlog of orders in the range of $16.5 million. So API Nanotronics doing something great, and you got to love the nanotechnology space because we know that's going to be a growth space for years and years to come. They're trading right now at $1.05. That's off a high of $3.49 earlier this year. So you may want to take a look, make sure there weren't any kind of one-time negative news events. But otherwise, on its face, this is great news. And naturally, if you want to know what they do, they provide electronic components and nanotech research to defense and communication sectors. So they're obviously targeting a great sector with great products. Next up, Western Wind Energy trades on the TSX Venture on the stock symbol WND. They announced some substantial revenue increase from their operations in California. Why? The state of California went through their pricing structure for 2007, 2008, and a couple of years ahead, and the favorable pricing structure is going to lead to about a 30% increase in revenue for the company out of its California operations. Specifically, it looks like about $2 million in additional revenue. The company right now is trading at $1.44. Be careful. Their price did spike from October 1st. It was trading under $1. So if you take a look at the chart, you got a bit of a 90-degree angle. We like to stay away from that stuff in the short term. But in the long term, you got to like this company. And what I also liked about it, and I didn't know, is that they're the largest producing pure wind energy public traded company outside of non-income trusts in North America. Right now, they've got over 500 wind turbine generators located in Southern California, and a lot of expansion when you take a look at this press release. So they're on to something over there, and that's Western Wind Energy. Next up, Organic to Grow trades on the OTC on the stock symbol OTGO. They announced two pieces of news today. One, some financing. They've closed about $4.3 million in institutional funding. They're trying to get about $6 million, but they got $4.3, and this brings the total money raised this year to $23 million. Big numbers, and this probably tells you why Morningstar's 5-star rated Winslow Green Growth Fund actually participated. They're the lead investor in this latest round of financing. And what I like is a stock quote that came from Matthew Patsky. He's a portfolio over at Winslow, who said, "We believe that Organic to Go is the right place at the right time with an exceptional management team." So you've got a major fund focusing on the sector, being a lead investor into a small cap company. That all adds up to potentially great news out of this company. They also announced, so they had two pieces of news. They also announced a purchase agreement to buy an additional 3 retail locations in San Diego. So that is a milestone for them because that now takes their total retail operations to 25 locations. Where can you find these Organic to Grow cafes? They're the nation's first casual cafe chain to be certified as an organic retailer. And what I like about their target market is you find their operations in multi-tenant office towers, corporate campuses, college campuses, hospitals, and even the Los Angeles International Airport. The company right now is trading at $1.95, and if you take a look at their chart, it's been hugging $2 ever since May. So this may be a good time to take a position. Finally, back to the TSX Venture Exchange. CanaDream, trades under the stock symbol CDN. They're announcing a normal course issuer bid. They're going to go out there and buy about 10% of their public float. So you're talking about $921,000 in common shares, 921,000 common shares, about $317,000 in debentures, representing 10% of their float. Why are they doing it? Quite clearly, the board believes that the value of CanaDream right now is greater than the present aggregate market price of their common shares and debentures. In short, they're trading way, way, way below book value. And look at this. Did a little bit of research. The company right now is trading at 42 cents. Back on September 25th, they actually put out their first quarter numbers. They announced $1.9 million in profits, translates into 12 cents per share. 12 cents per share, and the company's trading at 42 cents. So just based on first quarter numbers alone, you're talking about they're trading at just 3.5 times earning. Forget about what Q2, Q3, and Q4 are going to bring. CanaDream obviously is hitting big numbers, but they're not getting the market attention. I've known about this company for a long time. I've actually spoken to Brian Grauberg on a few occasions. They run a great operation over there. The one problem they probably have is they're not doing much. They're not doing enough on the market awareness side, and that's clearly evident from their market cap right now. The company's trading at 42 cents on the TSX Venture Exchange. That's it for the day. That's a wrap. As always, if you've got some market intelligence to contribute, make your way over to our blog, post a couple of your due diligence comments, and contribute to the greater good. Otherwise, if you want to find more great small cap investments, don't forget, make your way into the AGORACOM marketplace. There are more than 70 companies separated right now by industry and exchange that you can find that best suit your portfolio needs. Other than that, have a fantastic Monday, and we'll see you tomorrow.